Hey everybody, Smart Silver Stacker here. Hope you're doing well, and it has begun. What am I talking about? Well, the bank bailouts, although they're not going to tell you that, of course, or me, but we're going to take a look at what I'm talking about today, and I think it has a lot to do with why gold prices are trading today at all-time record highs, $2,168 for an ounce of gold today. Silver also catching a bid, $24.54. So solid gains for the metals on back of the rally that we have had over the past couple of trading sessions. This courtesy of today's video sponsor, SD Bullion. You want to get your hands on some gold and silver especially is still very cheap if you ask me. Make sure you check them out. So what's going on here? Well, let's start off with this speech from Fed Governor Waller. This is titled Thoughts on Quantitative Tightening, including remarks in the paper Quantitative Tightening Around the Globe. What have we learned? This is from March 1st, and this was one of the pieces of information that was released that kind of coincided with the rally that we are witnessing in the precious metals markets. It's a long speech, as you can see, and I really just want to draw your attention to 2 points here at the conclusion. First, he'd like to see the Fed agency's mortgage-backed security holdings go to zero, so those are assets on the Fed balance sheet. He wants to sell those off, but perhaps more importantly, says second, I would like to see a shift in Treasury holdings towards a larger share of shorter-dated Treasury securities. Now, how do you get a shift towards shorter dated Treasury securities? Well, you buy them, of course. Quantitative easing by another name. And if we take a look at the Fed balance sheet here, you can see quantitative tightening has been going on for some time now, but still it's done very little to put a dent in the Fed's total assets. All of this debt monetization, mortgage-backed securities, U.S. Treasuries that they've bought up, but now Fed Waller is hinting that he wants to buy the short-dated ones. So it's kind of an operation twist, bringing down the short end of the yield curve. And again, the way they do that is by buying assets. And when this is finally announced, when this comes to fruition, well, I think investors and markets, as clueless as they may be about the Fed and inflation up until this point, they're going to realize that this means the Fed's balance sheet is going to be moving much higher, and I believe a run-up in the price of gold and silver is going to coincide with that realization and with that event. Now, when I talk about the bailouts coming for the banks, look at this story from yesterday from the Wall Street Journal. New York Community Bank Corp to get more than $1 billion investment. Now, that's very convenient because New York Bank Corp was on the verge of collapse following the revelations that they had losses on their commercial real estate portfolio, that they had material losses in the way they calculated those gains and losses, a massive shakeup in their management, firing the CEO. The share prices were plummeting, and who steps in here? Who is it that comes in and invests $1 billion to bail this bank out? Well, it's none other than Steven Mnuchin, a investment banker, former Secretary of the Treasury, so an insider to be sure. New York Community Bank Corp raising more than $1 billion from a group of investors, including former Treasury Secretary Steven Mnuchin, in a bid to shore up confidence in the troubled regional lender. Now, that's very convenient that an insider comes in and commits $1 billion to bailing this bank out. I want to look at the chart here real quick for New York Community Bank Corp. Let's just look at the 5-day chart, and you can see this is what was happening before the announcement. So the shares, they've plummeted, but they were trading at over $3. Then look what happened. They plummeted down to $1.76, and as they mentioned in this article from the Wall Street Journal here, this was done after trading was halted. So NYCB shares went on a wild ride Wednesday after the Wall Street Journal reported on the fundraising effort. The stock plunged more than 40%, following below 2% before the last of several halts. So they had reported on the fact that they needed to come into the market and find investors to provide liquidity. Shares started to tumble on that. Now, once trading resumed after it was halted and they announced that these investors would be buying $1 billion worth of shares or injecting $1 billion worth of liquidity, the shares rose to over $3. So a huge gain. From $1.70 to a closing price of $3.46. And again, this is very very similar to what happened to SVB, as they point out here in this article just last year. Silicon Valley Bank, if you remember, they had announced they had lost something like $2 billion from the forced sale of U.S. Treasuries that had those unrealized losses on them to raise liquidity. They made the announcement that they were going to need investors to come in and they were going to sell shares, and that was what triggered the massive sell-off and the bank's failure, right? It had to go into receivership. Now, that's very similar to what was happening here, except, again, who comes in and saves the bank from that collapse? Well, it's, again, a former Secretary of the Treasury. So, this is somebody who was in Janet Yellen's place just a couple of years ago. So, this is essentially a bailout, if you ask me. They're having the private sector do it in order to, instill confidence, right? That's what it is at this point, just a big confidence game with these banks. Many of them are insolvent. Take a look at this. This is a story from last week regarding a bank called Republic First. So similar to First Republic, another troubled bank from last year, but this is Republic First. So they had been experiencing a huge drop in share prices. They had 52% of their deposits were uninsured at the end of 2023. They were suffering tremendously. They were going to fail. Looks like they're going to fail now. There was a $35 million capital infusion that Norcross Braca Group said that it was going to inject into this bank. Now, they pulled out of that when it was revealed that Republic First failed to meet the terms of the agreement. The reason I'm bringing this up is here's a statement from the bank. They said, "We have continued to maintain the bank's adequately capitalized position and believe we have a strong deposit base and ample liquidity." So, look, this is a bank that, according to this report, says that Republic First hadn't completed an annual securities filing with regulators for 2022. They haven't scheduled required shareholder meetings. I don't know what's going on over there. The stock was delisted in August. It's trading around 1 cent. So, probably fraud, gross mismanagement, huge losses. But look at their statement. They just still put this rosy face on it. So the thing you got to take away from that is that, the only thing you're going to hear from these banks, from insiders, from the powers that be, is that everything is fine, right? This bank, the shares price has dropped to 1 cent per share. Clearly, things are not okay there. And they tell you, well, we're adequately capitalized, everything's fine. So you're going to hear about it last when the banks begin to fail. But when that announcement comes, when one of these regional banks that has these commercial real estate exposures begins to fail, there's a couple of things that are likely to happen. One, you'll see them do everything they can to bail these banks out, whether that means getting a former Secretary of the Treasury to throw $1 billion at it, or creating something like the Bank Term Funding Program, which is scheduled to end in just a few days, by the way. That was last year's lifeline to these troubled banks, many of which are still sitting on significant losses. In fact, this bank here, Republic First, points out that they had $96 million of equity, but that excluded $262 million of unrealized losses on bonds that it labeled held to maturity. So again, this was an insolvent regional bank. Many of these banks are insolvent if you actually were to mark their assets to market. These U.S. Treasury bonds that they're sitting on, that they have these huge losses on, none of that has gone away. The can has just been kicked down the road. In fact, New York Community Bank, they were the ones who bought up Signature Bank, I think it was. This bank bought up a troubled bank last year. Regulators said, oh, it'll be fine. They approved it. Now we have this bank failing. So it's twice the size that it was last year. It's taken on all these troubled assets. This is just another exercise in kicking the can down the road and something that is inevitable. Now, the other thing that we might see is that the Fed might get in here and actively begin cutting rates. You'll know that it's a real crisis when that happens, though, because the Fed understands that, rates are already not high enough to combat inflation. That's why inflation is ticking back up. But they're going to have to cut rates to bail these banks out. The reason why, cutting rates is really the only thing they can do. That and returning to quantitative easing, driving the interest rates down on U.S. Treasuries, and also driving down the mortgages on these commercial real estate properties, the mortgage rate, so that buyers can be enticed to come into the market and bid up the price for these properties that the banks, these are the collateral for the loans on these banks, unless they want to see the banks take a bunch of huge losses and have it turn into a cascading financial crisis. But that's why ultimately the Fed's going to have to get a lot more active. That's why we're hearing Waller talking about a return to QE, just by another name, buying up short-term U.S. treasuries. But, buying treasuries is buying treasuries. In fact, the Bank Term Funding Program is ending on March 11th, but it still has more than $160 billion of outstanding loans to these banks. Is the Fed going to be able to collect on those? I doubt it. I imagine that those loans will just be added to the Fed's balance sheet along with everything else. So, so far, I think markets are beginning to kind of get wind of this. That is why the price of gold is trading at an all-time high. Silver is still very cheap. Right now it's the smart money, it's the central banks, it's the insiders, the Mark Zuckerbergs of the world who are bidding up the price of gold. The public, thus far, I don't think has shown a tremendous amount of interest in it. We can tell that because the premiums on physical bullion, retail bullion products remain pretty low compared to what they've been in the past several years. So no rush from the public yet. But when one of these banks fails and they're not able to convince everybody that everything is fine, that's when you're going to see a rush into physical bullion. I still think junk silver is going to be the thing that benefits the most from this, or one of the physical bullion products that you're going to see disappear from dealers first. The reason I say that is because that's what happened last year. So I just bought a couple more rolls of these from SD Bullion. One other thing I wanted to comment on this live stream was yesterday I was talking about inflation on a live stream, and I mentioned the price of a gallon of milk being around $8. And I had a lot of people in the comments say, "Where are you buying milk? Where's milk $8?" Well, look, I tend to buy organic milk. I didn't mention that in the live stream. I try to keep my consumption of Roundup to a minimum. And so that is the price of an organic gallon of milk. It's a lot higher than it used to be. This is probably the cheapest price that you can get on this over at Walmart. Yeah, I see someone saying bougie milk in the comments there. Well, yeah, I guess I'm a member of the bourgeoisie if I'm just trying not to, consume large amounts of pesticide and Roundup because, non-organic, I'm sure the organic milk's full of it too, to be honest. The food supply in this country has some serious problems, but it's not organic. Those cows are just eating shovelfuls of Roundup-ready soybeans, courtesy of Monsanto. So, yes, regular milk is still increasing in price. Non-organic milk, I'm sure it has gone up a lot, but organic milk is $8 a gallon. It's a lot more than it used to be. So, anyway, I hope that sheds some light on why I was saying milk was $8 a gallon. Not that it was too important of a point, but I just noticed there were a lot of comments about this. But anyway, let me know what you think about all of this in the comments down below. Stay safe, everybody. Happy stacking. Keep an eye out for more bank failures as we move forward, and they're going to keep bailing these out any way you can without calling it a bailout. But look, when you got a former Secretary of the Treasury coming in with $1 billion for a bank that was about to fail just the way SVB failed last year, well, you kind of know that the bailouts have begun, the stealth bailouts. Anyway, that's my take on it. Thanks for watching, everybody. Stay safe and happy stacking. Smart Silver Stacker, out.